In this discussion, we will discuss the discussion question of explain what a scatter diagram is and how it can be used in CVP, cost volume profit analysis. Now, if we see an essay question like this or a discussion question like this and we don't really have an idea of what the scatter diagram is, we can first start off with it. We might be able to think, well, I think the scatter diagram is something that applies to managerial accounting, to cost volume profit analysis. So we could at least start there and maybe pick up some points by saying, hey, this is typically a tool in managerial accounting as opposed to financial accounting analysis. Usually it's going to be a part of the CVP, cost volume profit. Yes, we're basically saying what's already kind of in the question with the CVP analysis, but again, we might be able to pick up some points by just stating what is kind of the obvious there. The scatter diagram being part of the CVP type of analysis, part of managerial accounting, part of decision making, a tool that's not required by financial accounting or regulations, but one that can be decided to be used by management. So that's one area we might want to start off with. Now, the scatter diagram is typically something that we will consider as a tool when we're trying to break out the behavior of costs, when we're trying to break out the cost between variable costs and fixed cost. So some things will be very straightforward. We'll have a variable cost and it'll be variable cost. It is what it is. Some things will be fixed and it'll be fixed. But then we'll have some of those costs that will be what we call mixed costs. And there's not a clear relationship. In other words, we don't really know we don't see a clear relationship between a straight line relationship between the increase and decrease in production volume and the cost. And therefore we have to make some kind of prediction because we can't have a mixed cost. We can't have that. We have to break everything out into variable or fixed for our CVP, cost volume profit type of analysis. One way to do that is to try to plot the points in the past and just say, okay, on the x-axis or the horizontal axis, we're going to have the volume of production, and then on the y-axis, the vertical axis, we're going to have the cost. And we'll just look at some past history and we'll plot that out. We'll just plot out the points. We'll say, okay, here's the level of production and here's the cost that has happened throughout the past that we have. This is the data that we have. We'll plot that out. And it might be some ugly looking thing, just a bunch of dots that don't line up. There's no nice line that might not line up perfectly, but hopefully we see a trend, some kind of trend happening. It might be floating upwards. And if we were to imagine kind of a line that would be an average of those dots, of those data point, we might then see it trending upwards. We might then see it aligning with the or the vertical axis at some point. And in so doing, we can then make a prediction about what the fixed portion would be, which probably would be at the point where it intersects with the vertical axis, because that we would assume that would be fixed costs. And then we can assume the variable portion of it as well. So we can, in that format, try to get some idea of the fixed and the variable portion. That's one way to deal with the mixed costs and try to make some projections or predictions about the fixed and variable components of it with the use of a scatter diagram.